Ladies and gentlemen, good day and welcome to Muthoot Finance Limited Q2 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anshuman Deb from ICICI Securities. Thank you, and over to you, Mr. Deb.
Good evening, ladies and gentlemen. On behalf of ICICI Securities, we welcome you all to the Q2 FY23 results conference call of Muthoot Finance. We have with us the management of Muthoot Finance, represented by Mr. George Alexander Muthoot, Managing Director, Mr. Alexander M. George, Whole-Time Director, Mr. George M. Alexander, Whole-Time Director, Mr. George M. George, Whole-Time Director, Mr. George M. Jacob, Whole-Time Director, Mr. Yepan Alexander, Executive Director, Mr. K.R. Bijimon, Executive Director, and Mr. Oommen K. Mammen, Chief Financial Officer. I now hand over the call to the management for the opening remarks, following which we will open the floor for Q&A. Over to you, sir.
Get into the numbers and the business of last quarter. The consolidated loan assets under management increased to 64,300 crores, up by 6% year-on-year for the half year, and consolidated profit after tax increased to 902 crores, up by 9% Q-on-Q for Q2 financial year 23. Standalone loan assets under management increased to 57,230 crores for this half year, which is up by 4% year-on-year, and standalone profit increased to 867 crores, up by 8% quarter-on-quarter. So compared to last quarter, our AUM has also started slowly growing. Our profit has also improved compared to last quarter. Another key highlight is RBI had given, or rather we had requested for the first tranche of 150 branches, new branches to be opened. We have got the permission for that. Out of that, by September, we have opened 24 branches, and we hope to complete all the 150 branches, which are in various stages of construction and fit out by end of December. We are the first NBFC to launch the Milligram Gold Program, a gold reward program for all our customers. As our CSR initiative, the Cup of Life entered the Guinness World Records by distributing 1 lakh plus free menstrual cups across 126 venues in 24 hours. The program was aimed at eradicating the menstrual taboos and spreading menstrual awareness in the society. Also glad to state that we have now been classified as an upper layer NBFC, one of the top 16 NBFCs in the country. We feel it is definitely an recognition of the size and the business of Muthoot Finance. A meeting of the Board of Directors held today was considered to approve the unaudited results for this quarter. I think all the other details, etc., are there with you, and I think we will now get on with the clarifications and questions or clarifications which you want from the management. Over to you all.
Thank you. Ladies and gentlemen, we will begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Oberoi from Yes Securities. Please go ahead.
Yeah, sir. Good evening. Sir, I would like to know what was the incremental yield of gold loans in second quarter?
So the yield is 17.3% for the quarter.
And sir, incremental on the disbursements done in second quarter?
I don't have that
You don't have
number.
that answer. Very early, the yield on the portfolio
As on for the quarter is 17.3.
Okay. And sir, what part of the book will be yielding less than 10% or below?
So right now, I don't think we have
I don't think we have any portfolio below 10%.
We have moved all the teaser loans to higher buckets. So in single digits, I don't think we will have any portfolio.
I don't think we have any portfolio.
Okay. So the entire AUM is on standard products, standard rates now.
Upward of 10%.
Yeah. Okay. And just last question on how has been the momentum of disbursements during the festive season, say October and November, and has it picked up significantly, and can one assume that disbursements in this quarter, Q3, can be significantly higher than Q2?
I think we'll have to reserve that answer because it's not there in public domain. But let's speak it after the third quarter. But generally, if you can look at our disbursement, it is going at a certain pace. So I think we are hopeful about continuing that level of disbursements.
Okay. Thank you. Thank you so much, sir.
Thank you. The next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yes, good evening, everyone. So just 2 or 3 questions. Would it now be fair to say that large part of your focus is now back on lower ticket gold loans which have relatively higher yields? And maybe a related question, on the borrowing side, till when can we expect that you will continue to see the benefits of higher cost debt retiring and being replaced by lower cost borrowings?
So in terms of borrowing costs, I think our 450 million external commercial borrowing is already got retired in October. So that was done at a very high cost. So that will have some savings. So the borrowing cost as of September 30 stands at around 7.98%. So there will be some decline which will be happening in the third quarter. But I think since the borrowing cost is also going up, I think in the third quarter also we are expecting it to remain somewhere around 8%.
And about the loans, yes, as we said earlier, the teaser loans are not there now, and very low interest rates are not there now. So we don't have any such loans with us now.
Got it. Sir, what proportion of your gold loan book today would be towards those higher ticket teaser rate loans which you did during December to March? I understand you migrated them to higher interest rates, but what proportion of your gold loan book would be towards those higher ticket loans that you did during December and March?
That time there were some 20-30% of our book. I don't think today we don't have any such interest. They have either migrated or closed them. They have either migrated to the higher scheme or they would have closed their accounts, because any loan account is there only maximum of 2 to 3 months. So in the last 1 quarter, all of those loans would have closed and gone. Some would have not migrated, some would have closed and they have taken the loan at the new rates.
Understood, sir. And so my last question is on your operating expenses. More particularly, what proportion of your employee expenses are variable in nature, such that when you see a decline in your disbursements, you also see a commensurate decline in your employee expenses. And also, your advertisement and promotion intensity, or so to say, the expenses that you incur on advertisement and promotion has substantially moderated in this quarter versus last quarter. Is there some seasonality to that, or was it a conscious strategy to reduce your ad and promotion spends, given that you now see the competitive landscape turning much more benign?
No, we have not taken any decision to reduce our ad spend. We will be continuing to do it. Maybe some of those expenses will come in the next 2 quarters. So whatever we had budgeted for the advertisement expense, we definitely will be doing it. And if it is just seasonal nature, some quarters, some months, or advertisement will be lesser, but coming months it will be set. So suffice here to say that our advertisement spends would be on track or whatever we have budgeted, we will be doing it. The next question is about the employees' incentives, etc. Some of those things in the last quarter and this quarter, etc. Some of these incentives and bonuses, etc., would be paid in Onam bonus, etc., would have been paid last quarter. The Diwali bonus, etc., would have been paid somewhere else. So that overall, by the end of the year, it will be the same.
Understood. Just squeezing in one last question here. Earlier, you suggested that large part of those teaser rate loans have either migrated or closed. So just wanted to understand then why is it that the yields are not improving? If, large part of these teaser rate loans have moved to, higher interest rates, like you suggested, upwards of 10%, or they either, kind of closed down, then what is the reason that we are not seeing an improvement in yields?
There is definitely improvement. It is only that we have not reached the highest level which we have reached much earlier. Probably we should not be thinking of very, very high yields also, because things are changing. So probably our yields, what you said is not correct. The yields are improving, but it has not reached the very earlier level. There was a very high yield. We may not have reached there, but definitely we have increased. So as he said in the first question, somebody asked, our today yield is 17.3%, and that definitely is much better. Probably we have not reached the 19 and 20%. After a while, we should be able to reach that also if the economic activity, etc., is there.
So thank you for patiently answering all my questions. I will get back to the question. Thank you.
Thank you. The next question is from the line of Umang Shah from India Bridge Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, the first question was in terms of value, we had very high auctions in FY22. However, in terms of number of accounts that we auctioned, we had the highest number of fees in 2016, FY 2016, which was fee demonetization. Sir, could you go back in time and give us the reason for the same of why 2016 was the highest year for auction for us?
I think 2016, I don't remember.
The LTV regulation.
The 2016 was the year when there was a steep decline in the gold price. There was LTV regulations. I don't exactly remember. It was about 6 years back which has happened. So now it has almost stabilized. The highest, the big, very lumpy auctions are not there now. Probably last year and this year only the regular usual auctions are there, and usual auctions are there part of the business.
Correct. Right, sir. Sir, and second question was, sir, in terms of increasing aggression by commercial banks in gold loans, sir, do you think that some of it is also coming from unorganized sector accessing this credit?
No, I don't think it is. Unorganized sector is also has always been there, but they will not be growing much, but they will be stabilizing on what they are already doing. But of course, the banks are certainly doing more gold loan business today.
Right, sir. So what I meant was the unorganized sectors pledging the gold of their customers and taking loans at 8-9% from banks and then further lending them to other customers, like using banks as their source of financing.
That we call that as repledging, which is actually prohibited or it is not permitted to take unorganized sectors loan and then do money on that, because we can do loan or the bank can do loan only to the owner of the gold. So if somebody is collecting gold from many others and taking it to NPS, no NPSC does that. We are not permitted to do that. But I'm not sure whether banks are doing it or are doing it. I'm not sure about that. If somebody is doing it, it is not permitted.
Great, sir. Thank you so much for clarifying on these points.
Thank you. The next question is from the line of Aditya Jain, Muthoot Finance Analyst. Please go ahead.
Hi, sir. Please can you speak about your stance on credit card business?
Credit card business, I think we have given a letter or applied for a permission to RBI. I think they are in the consideration stage. We have not heard anything from them as yet, which is the credit card you are asking. In fact, we are asking for a payment card. Disbursal card, yeah.
So, sir, by when can we expect the changes to be incorporated and credit card business to commence?
Actually, with the regulator, I'm not the person to comment on that. But the vibes and the conversations which we're having with the RBI, they are looking kindly at that, and probably they may come up. I don't have any timeline with me, but I think I'm hopeful that they should be able to do something on that. They are not doing any decisions as yet.
And sir, just to add on, so our existing customer base would be the target market for the credit card business, or are we going to foray into newer?
Mr. Jain, I
all
think
this is too premature. It's not too premature, sir.
Okay. Thank you. I think this works for me. Thank you for the time, sir.
The next question is from the line of Ganesh Nagarsekar from Individual Investor. Please go ahead.
Hello, sir. So I basically have two questions. One, if you look at the AUM growth of other private players in the market, they're growing at quite a good rate. So are we kind of losing market share? And if yes, what are we kind of looking to, how are we trying to deal with that? And secondly, on the new branch growth that's there, how does the AUM per branch typically scale over the first, say, 2-3 years or so? If you could give some amount of clarity on that.
I'm not sure from where you are saying that other NBFCs are growing. India Gold Loan, everybody is growing. I don't know. I don't have any statistics on that. I may not be able to comment on that. About our company, I should be able to say. The other NBFC, which is listed as Manappuram, I think their results are coming out only later. So other than that, we have no visibility on other NBFCs growing. Then your next question was about what was it? Second part was.
So the AUM per branch for the new branches that you're opening, how does that typically scale over 2-3 years or so?
It takes a year or two for a branch to stabilize. So once a branch gets opened, it takes a year or two for the branch to gain good traction. But anyway, from day one itself, we start getting business. And we have seen some branches attaining very good level in 1, 2 years, 3 years time, and some attaining a very good level by 4, 5 years. It depends on the location of the branch. It depends on location, means locality where they are, and the need of the people to take loans, and the mindset of the people to take a gold loan instead of some other loan. So all those factors are we take our considered views on that and then open the branch. Sometimes, in some cases, it is quick. Sometimes it takes a little time. But anyway, no branch becomes profitable or in quick time. Maybe in 1 year or so, every branch becomes break-even.
Understood. Thank you, sir.
Thank you. The next question is from the line of Arul Selvan, Independent Advisor Private Limited. Please go ahead.
Good evening, sir. Thank you for giving me this opportunity. I wanted to come back to the same question which was asked earlier with respect to the yields after the teaser rates have been withdrawn. So if I remember, last quarter you said that the teaser rates were withdrawn, or you had migrated most of the customers to higher rates. But if I look at the yields over here, compared to Q1 of FY23, the yields have barely moved. I can see a very, very small change in this. So is there some high amount of competitive intensity that you're seeing nowadays?
The portfolio was there. That is one of the reasons Q1.
Sir, I'm sorry, I couldn't hear the last 10 seconds. Could you repeat that?
couldn't hear me. Okay. The yields in Q2 is a function of the old loans which were given earlier at higher rates getting redeemed also, and also the lower rates in that quarter. In this quarter, the benefit of that very old high rate loans are not there in the Q2, but then the Q2 new loans are at not teaser rates. So it is a function of both of that put together. That is why you are not seeing the impact of that in the way you said. In Q1, the old loans which were at very high rates were there. That helped to compensate to some extent the teaser rates. In Q2, those loans are getting retired. The very high loan interest rates are retired. So we have only the lesser of that. But then the positive is that the new loans are at higher new rates. I hope you understood.
Yes, sir. Yes, I follow you. So would that mean that the guidance of perhaps the rest of this financial year in terms of our yields will be better than what we already have?
I think the quarter the yield should slowly inch forward also.
Okay. And if I can squeeze one last question, sir, is your guidance for the annual growth rate in the loan book, is that remaining the same, or would you be revising it to some extent?
We don't want to revise it now. We are hopeful that we should be able to achieve the 10% in the next 2-3 quarters. Let us see. We are putting our best efforts to do it, and we hope to achieve that 10%. So this quarter we were able to grow a little. Probably next 2 quarters we should hope to do better.
Okay. Thank you very much, sir.
Thank you. The next question is from the line of Sanket Chheda from B&K Securities. Please go ahead.
Yeah, my 2 questions were answered in the previous one.
Thank you.
If I can squeeze in one thing on Q3, whatever incremental disbursements are happening, if you can give us a flavor that what would be blended yield on that, will it be about 17.3 or 17.5 to get a directional flavor on the yields?
Incremental lending we do at several rates. We do at 12%, 15%, 18%, etc.
Blended.
Blended should certainly be going up, but we cannot. The proportion of the 15%, 14%, 20%, 21% depends on the geography to geography. It depends on the place and the seasonality also. But we will be trying our best to have little more higher yields in the disbursement in the coming quarter, if that is what we want to do. But we cannot say that I will lend only at this rate, etc. The rates are dynamic, so it is need-based, demand-based, etc. And
to one of the earlier questions, if I understood that maybe Q2 the yields didn't move up because we had some a portion of teaser rate loans and now which has run off. So going forward, that drag won't be there. Is that correct?
Okay, you are correct. The teaser rate drag will not be there.
Sure, sir. Those were the 2 questions. Thanks a lot.
Thank you. The next question is from the line of Subhranshu Mishra from Phillip Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. 2 questions. One is on the yield, just to persist on the yield itself. We mentioned that we had very much done away with our teaser rates in April or May. So, which means the second quarter won't have had as much of an impact of those teaser rates. So, why is it that the yield is almost static? First quarter was 17.3, this year we are at 17.4. Any possibility of increasing the yield by around 200-300 bits in the second half? Otherwise, we are seeing our return ratios compressing. Second is on the AUM growth, sir. Earlier we had a guidance of around 12 to 15%. You just mentioned in the previous question, the answer was around, you guided for around 10%. So we are decreasing our AUM guidance for the full year. Is that a correct understanding, sir?
I think regarding the yield of comparison of yield of Q2 and Q1 and Q2, I think I had explained it in detail 5 minutes back. So I explained that part in detail. But to answer one part of your question, that also I had answered that our yield going forward should definitely be inching forward. The third part of your question was about the guidance. We are always set 10 to 15%, but because of all these the growth which is not happening Q1 and Q2, we still stand by the 10%. Not that we have reduced it. We said 10 to 15, but because of the present situation, we should be looking at least 10%.
Sure, sir. And if I can squeeze in just one last question, sir. This is usually when second quarter disbursement and collections are always higher than the first quarter. This is the only second quarter in the last 2-3 years where the collections as well as monthly disbursement has dipped by quite an extent. Why is that, sir?
See, compared to last year of the same quarter is what you're saying. Last year of the same quarter of the situation.
No, the last 3 years, sir. Last 3 years, if we compare 1Q versus 2Q, is always an increase over 1Q.
Okay. So not necessary that sometimes the situations would have changed. The economic situation would have changed. That is why we don't have any other explanation for why it is not there as a trend in the last 3 years and this year. I don't have any specific reason for that. There's nothing specific in that.
Understood, sir. Thank you so much. Best of luck.
Thank you. The next question is from the line of Shweta Daptardar from Elara Capital. Please go ahead.
Thank you, sir, for the opportunity. A couple of questions. So why the tonnage has not moved quarter on quarter?
So, madam, I think somebody has asked. Somebody has not asked. The tonnage is actually a function of the gold price. If the gold price is low, the tonnage will be higher because people have to bring more gold. To take the same amount of gold, if the gold price is high, they need not bring 100 grams, they need to bring only 95 grams. If the gold price is low, they have to bring 105 grams. It is exactly the function of the gold price. If the gold price is high, the tonnage will be lower. If the gold price is low, the tonnage will be higher. That is exactly the function of that. And because people bring only the required amount of gold. We can't ask people to bring more gold. So that is the function of that. But what we need to look here is the disbursement amount, because our profit or income is based not on the gold with us, but with the other. The second part, gold is only a collateral, and even today, our collateral is our average lending is less than 70%. So we still have good margins with us.
Okay. So I thought because gold price has also not moved much, exactly why I raised that query. Anyways, I got the moot point. So secondly, somebody touched upon this question already on AUM per branch. So while you mentioned it takes a year or two, for the branches to stabilize. So can you just guide on the fact that incrementally, how much does a new branch add to the overall AUMs?
I told you it takes a year for the branch to reach the break-even level. So after 1 year, it becomes break-even level, and then it starts growing only. So it takes 2-3 years or 4 years for the branch to reach its full potential.
Okay. Then one last question. So, okay. So one last question, which also you have partially answered already. So you mentioned that you are hopeful of 10% full year growth. So, but if I look at quarter-on-quarter movement, and if we expect a 10% growth, does that mean Q3, Q4 will be two robust quarters going forward?
Yeah, that's what we hope to. I think you and I cannot say whether it will be a robust or a non-robust quarter.
So where I'm coming from is because you also mentioned that you do not see much of competition coming from unorganized side, barring banks who are largely focusing on high ticket loans. and we are already on competitive rates. So is it fair to assume Q3, Q4 will be much better, and therefore 9 to 10% growth is plausible?
That's what I said, yes.
Okay. Thank you, sir.
Thank you. The next question is from the line of Amarnath Bhagat from Ministry of Finance of Oman. Please go ahead.
Hello, sir. Can you just give a clarity regarding this branch opening related RBI approval? How many approvals do you have for opening the new branches? Or is that problem as resolved?
I think there is no problem. It is only that the RBI had kept the new branch permissions on hold for a year or so. But now they have given us permission to open branches, and we have requested for 150 branches, which they said okay. And of that, we have opened 25 branches. The other branches are in various stages of construction. Probably by end of December, we should be able to open all the 150. And thereafter, if we feel we need more branches, we'll apply for more branches. So there is not any no
that
problem.
Means whatever 150 you applied for, you got it, right?
Yeah. Yes.
Okay. So that was very comforting. Now, if I look at your revised or current ROA and ROE, which is now came down to say ROA of 6% and ROE of around 18%. Now, can we take this is a new normal, because previously your ROA is much higher. Of course, the situation was different. Now, considering the current situation, for our all projection basis, can we take this 6% ROA and around 18-19% ROE is something normal going forward?
No, I think we would like to see it go up, and we would expect it to go up slowly also. We would not like to keep it as a normal. We would like to grow it slowly. So we should see it at least slowly going up.
Okay. Sir, one more question. In the staff side, I can see your number of staff added only in the Q2 is around 587. If I deduct the Q2 total minus Q1 total. Now, 587 staff in one quarter, when the business is not that much growing. Just can you elaborate why those staffs are going? What is the purpose of adding that many staffs in one quarter itself?
500 staff out of a 20,000 staff is nothing, sir. New branches.
I'm talking about an adding itself is 2% more. Means 587 added in one quarter.
That is no great number, sir. It is just a 1%.
So if we open 150 branches, we at least require 600 regular staff. So we can't, when we are looking at opening in next couple of months, we have to train them. So earlier, this was going as a regular process. Now this has come up, so we recruit. Then some employees leave also. So, all those things have been kept in mind when it comes to the recruitment part.
Sir, what about your subsidiary part, sir? Especially this, I can see the fantastic growth happening into this microfinance side, especially. If you can give a little more light about that part, because it appears to be growing very fast. What is your outlook in respect of this microfinance side of the business?
Microfinance is a good business, which is well appreciated by everybody, the customer, the regulator, the government. Everybody would like to see the microfinance business grow, and we see a lot of potential there. It is putting purchasing power in the hands of people, and they see that the sector offers good potential.
Sir, have you something keep in mind? My purpose of asking the question is, have you something in mind that at what percentage you are intent to grow the microfinance book at 20% or 30%? Some kind of an idea can you give that at what percentage you are trying to grow that particular book?
No, we don't have any particular guidance on the microfinance percentage, etc. As and when there is demand and things, we will grow that business also.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Bunty Chawla from IDBI Capital. Please go ahead.
Thank you, sir. Thank you for giving the opportunity. Most of the queries has been answered. So a few data points if you can share. So one is that during the quarter, if you can share what was the auctions which we have done?
We did 578 crores.
578 crores. Okay, sir. And secondly, if you see the presentation part in that where you have shared stage 1, stage 2 assets, loan assets, there has been a slightly hike in the stage 2 loan assets from 461 crores to 864 crores. So how one should see that part going ahead? Any impact in terms of stage 3 assets going forward or any provisioning which could be required during next 2 quarters?
Actually, it's quite normal, no? If in a particular quarter disbursements are higher, 12 months afterwards, naturally the stage 2 could be higher, depending upon the collection efforts which we do. This will fall into the overall risk management metrics for us. We look at what is the interest accrued. Suppose if the customer has regularly paid interest, we don't see much risk in that particular portfolio. So we allow these customers to some more time. That's how we have the stage 2 and sometimes even the stage 3 assets also go up. Unlike other financial institutions, here it has to be seen slightly differently.
Because it is fully collateralized with gold. So even if somebody reaches stage 1 or stage 2 or stage 3, we are not going to lose our money. It's only giving little extra time to the customer.
Okay. So we don't require any ECL provisioning because of this regulatory part assets going forward. My sense was that.
We have to make, suppose if stage 2 goes up, suddenly the ECL provisions will increase because stage 2 also requires ECL provisioning.
But that ECL provisioning will not result or ECL book or the stage 2 and stage 2 will not that's the point we were trying to say. Provisioning etc. is just a provisioning in our books. We are not losing any money there.
Okay. And lastly, sir, on the cost of funds, though on the yields you have spoken, so how one should see the cost of funds moving for the full year FY23 as compared to FY22, as we are seeing repo rate hike and other hikes are happening in the bonds also?
I think it should somewhere around 8% we should be able to manage. Let's see how it is. At least in the third quarter we should see it remaining around 8%.
Okay, so for full year 8% we can consider till now.
I'm not sure about the fourth quarter. Depends upon how the rates are going up.
Okay. Thank you, sir. Thank you. That was very helpful, sir. Thank you.
Thank you. The next question is from the line of Madhuchanda from MC Pro. Please go ahead.
Hi, sir. My question was about your loan growth outlook. We have seen kind of a 1% kind of a sequential growth in the loan book this quarter. And when we interact with private sector banks, we seen that gold loan has been identified as a kind of a thrust area for them. So what I really wanted to understand from you is, if they are putting a focus on gold loan, obviously their yields are going to be much lower than yours. In that case, which is the pocket of the market which you are targeting to grow your loan book by 10%? If you could give some qualitative understanding about the same.
No, madam, I think we have given a guidance of at least 10%. Hopefully in the next 2 quarters, we should be able to achieve that. So there is no specific market, etc., which we want to tap and no other market which we don't want to tap. Our branch caters to, we have 5,000 branches. This caters to the local people there, and we don't leave any type of customer or any type of a loan size, etc., behind. So whatever comes, we will do. And that is what we will be hoping to do in the next 2 quarters.
I just want a small understanding from you, sir. I mean, what is that the banks can't do that you can do?
I think we are getting too much into details, madam. I don't think all what bank can do, what we cannot do, etc. What is being proved always. So we will do that. I don't know what you mean by saying what banks can do and what we can't do.
I mean, is there a segment which is something where the banks cannot penetrate, which will remain a forte for someone specialized like you? That is what I'm trying to understand.
See, banks have always been doing it. The fact that NBFCs are excelling in certain activities because we are able to do it in a cost-effective manner, better service to the customers. That is a key differentiator for as far as any NBFC is concerned. So the same applies to us also.
Okay, so what you're trying to suggest is it is the cost factor which will give you an edge over banks in certain pockets of the market.
No, it is not the cost, it's service factor, it is service part.
And the service quality, the better service quality.
And the service quality.
Okay, got it, sir. Thank you very much.
Thank you. The next question is from the line of Shreya Shivani from CLSA. Please go ahead.
Thank you. I have two questions. First is on your borrowing profile. We can see that the share of term loans from banks has risen up to 56% now. It used to be at 47% in the second quarter last year. So any colors you can give to us on this? Where would you see this mix going? Will it increase or will you be trimming it down? My first question is on that, and the second is on the liquidity on the balance sheet. I think you guys had mentioned last time that you've reduced it and you will maintain it at this level. I can see it is at 12% level for second quarter. So will it continue to be at 12% going ahead? Just a confirmation on that.
So, as far as the level of borrowings from banks, it all depends on the cost factor, availability of funding. So, depending upon the scenario, we try to tap that particular market. Now, bank funding was easily available at some point of time. We tapped that market. We got at a better yield, better rate of interest. So we tapped that market. So the whole borrowing program is based on the availability and at what price. So those factors were acceptable for us. So that's why the bank borrowing proportion is higher. I think
on the liquidity.
On the liquidity part, September end and the liquidity level have been kept high, slightly higher because the first tranche of ECB was getting due for payment by October end, which we repaid as of now. So we were preparing for that, about 3,700 crores of repayment. So that's why we have kept a slightly higher liquidity as on September 30. Though we have brought down the liquidity levels during the quarter. In the intra quarter, we had brought down the liquidity a little bit. So I think our endeavor is always to keep a normal liquidity. We don't want to keep a higher liquidity and bear a higher interest differential. So I think going forward, we will try to prune our liquidity to a certain extent. At the same time, we need to take care of the LCR requirement as well as the comfort of the debt investors, etc. So we will have to maintain at a certain reasonable level.
Got it. And you also said next tranche of ECB repayment is due when?
That is, I think, in September 1st, 2023.
September 2023. Okay, that's it for me. Thank you so much.
Thank you. The next question is from the line of Maruk Achania from Nuvama Institutional Equities. Please go ahead.
Yeah, good evening, sir. So, though this has been partly answered through many questions earlier, in response to many questions earlier, I would seek some more clarity. So, who are your main competitors right now? I mean, what is the time frame they've evolved in? Because when we speak to state banks, they say that they were not earlier doing non-agri gold loans, and only over the last 2 to 3 months they are going aggressive on non-agri gold loans. But we don't have separate numbers from them. Likewise, are there any fintechs who are directly competing with you in your segment?
Ma'am, I think you answered that yourself. We also don't have much understanding on what is their portfolio earlier and what is their portfolio as of now. So, I think without those finer points, we'll not be able to answer that question from you.
Right, but any practical sense, the feedback you get from branches and stuff like that?
So, banks have probably around 70,000 branches across India. We are only having 4,500. So, every bank try to do every business a little bit. Certainly, if it is 4,500 against 70,000, naturally it is a competition for 4,500 branches.
Okay, sir. Thank you.
Thank you. That was the last question for today. I now hand the conference over to management for closing comments.
Thank you all investors. Thank you for supporting us. And from our side, we will assure that we will do our best in the coming days, in coming months, also to keep in mind the interest of our investors and all other stakeholders, and I'm hopeful of doing better in the next 2 quarters. Thank you.
Thank you.
Thank you.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.